And the Bank Nifty has been positioning itself for that, and let's get in Nilesh Jain's view on that as well. He's head of technical and derivatives research at Centrum Broking. Nilesh, good morning. And the Bank Nifty withstood some bit of sideways movement by the larger markets yesterday, Nilesh. I wonder, I'm starting over with the Bank Nifty, we'll get to the Nifty as well, whether you can give the comment there. But if somebody were to be long the Bank Nifty ahead of the MPC decision, would you recommend staying long until the end of day today, or would you recommend booking profits here?
Very good morning to Neeraj. Good morning, everyone. So yesterday we have seen an outperformance, and some profit taking at high levels was seen in the Nifty and Bank Nifty both. But yes, the comfort is coming in the Bank Nifty. Reason being, it has sustained yesterday's gap up move, and it is also sustaining well above psychological mark of 50,000. So looks like it is heading towards 50,800 to 51,000. So that's the immediate target that one can keep an eye on, and we are advising to stay put, keep a stop loss below 50,000 in the spot levels as long as it trades above that. There are high possibility in a day or two we may see Bank Nifty moving towards 51,000. So that's the 200-day moving average as well. Now coming to Nifty, comparatively we have seen some underperformance yesterday on the back of profit taking. It is facing resistance at the 23,800 mark. So I would rather wait for a breakout about 23,800 before buying Nifty, and then probably we may see Nifty moving towards 24,000 as well. So undertone and structure no doubt looks positive, but advisable to buy on a breakout, or better wait for some dip towards 23,650 that can be bought within with keeping a stop loss below 20,600. So structure wise, Bank Nifty looks strong.
All right, let's talk about your pick as well today. Nilesh, how confident are you in picking buys today? Are you splitting it, or are you picking buys?
So the focus is definitely on the buy side. Ambuja Cement is something that is looking strong. If you look at the cement pack as a whole, ACC, Ambuja, Ultratech, JK Cement, in fact, all these stocks are looking strong on the chart. So on the back of that, we may see a follow-up move in Ambuja Cement, a move towards 535, 540, something that we are expecting, with keeping a stop loss below 511. Ambuja Cement can be bought, and upside target would be 538. Apart from that, another stock that is looking positive is Tata Power. So Tata Power is gradually moving higher. 380 is a breakout zone, but we are preempting that it is likely to move towards 390 to 400. These are the position target. With a stop loss below 355, Tata Power can also be bought. And another stock that is on our radar is Piramal Enterprise. So within NBFC space, ahead of RBI policy, we may see a follow-up move to continue. So Piramal is something that is looking attractive for upside target of 1,075. Stop loss can be placed below 1,030.
Tata Power, of course, posting its numbers yesterday. It was a beat on the EBITDA and the PAT side, on the profit side. Let's talk about earnings though, and we've got 6 Nifty 50 companies that will be reporting numbers. You might have got that actually on the bottom of the screen, but let me read out the companies for you. There's Bharti Airtel from the telecom space, certainly something to watch. Britannia Industries, as well as ITC and Trent, because that is something that you want to focus on when we're talking about the consumption story and how that plays out. Trent, by the way, has lost ground in the recent past. It was flat yesterday, but it lost ground day before yesterday. You've also got ITC, or rather, you've got Hero MotoCorp and State Bank of India. Hero MotoCorp from the two-wheeler space. And you want to watch for the commentary on motorcycle sales going forward, because that's going to give you an indicator of how the consumption in the rural market is going to play out. And State Bank of India, of course, you've seen a lot of public sector banks report numbers, and the asset quality has been a very positive surprise for a lot of them. Let's see how State Bank of India comes out with that. We've got Mahima joining in to talk about another consumption play, and we spoke about it briefly. Swiggy, it was on Tamanna's list. It was a thumbs down. But what are brokerages talking about after the results? Mahima, what are they saying?
Right, so I'll start with UBS. They've maintained buy with a target price of 510. What they're saying is that Q3 was better in terms of food delivery, but quick commerce has underperformed its peers. Competition in quick commerce space is intense, and margin pressures will continue in the next few quarters as well, is what the brokerage is saying. The next one is Macquarie on Swiggy. They've maintained underperform with a target price of 325. In terms of Q3 numbers, they're saying quick commerce economics meaningfully are challenged now. They've reported a wider better than expected headline net loss, which was dragged by Instamart. In food delivery, they are seeing a clearer path to achieve the company's margin guidance, but they see challenged economics in quick commerce, slower growth in food delivery, and stretched valuations, which is why they've given underperform as a rating. However, they've also given a line with respect to Zomato as well. They said that they're underperform on both Zomato and Swiggy as a platform, but they continue to prefer Zomato over Swiggy. Last one on my list is JP Morgan. They've maintained overweight with a target price of 620. So this is completely in contrast to what Macquarie has to say. They've said that food delivery was solid in terms of performance. Quick commerce displayed no growth, which is kind of concerning, and any correction in the stock will be an attractive entry point for Swiggy, is what the brokerage is saying. So this is the overall view as to how brokerages are reading Q3 numbers for Swiggy.
Brokerage reports are not actually that negative if you go to see. And let me get Nirav's point of view on this. Losses are widening because more dark stores are being set up, very simply put. And they cannot be in this business without setting up more dark stores. I mean, competition now is promising test drives of cars in 10 minutes. Some might say that it's, do you really need this as a society? That's a different issue for a different day. But Swiggy financially needs to do this. Well, is that what the street will also watch when seeing these widening net losses?
Well, yes, because I think a lot of money seems to be going in the expansion-related initiatives, and we've seen the impact of that. We've seen the platform GOV, gross order value, go up by 38%. The food delivery business has solidified its presence, and it's grown by around 19%. The quick commerce is facing some headwinds. There are some challenges over there because the competitive intensity has gone up quite a bit. But I think the dark stores expansion is something which is eating into the contribution margin, and I think that has led to the EBITDA losses widening at this point of time. But I think overall the outlook looks positive if the company were to be in a position to navigate these headwinds over the next couple of quarters.
Okay, I don't know if we've had enough data for a technical call on this. But let me get Shrikant Chauhan off the bat. Shrikant, since we're talking about Swiggy and Zomato, let me ask you both if you're looking at it before we get to you on indices, etc.
Good morning, Tamanna. Good morning, everyone. Say for Swiggy and Zomato, I think both these stocks have fallen to their extreme levels. But Zomato, I feel it is going to remain in a range between 250 and maybe 200 on the downside. So in case if there is any correction, then only we should look for adding these stocks. Otherwise, at these levels, there is no point in buying the stock. I'm not expecting any rally sort of activity because it is like completely overbought sort of stocks, and a lot of people have this position. So maybe it will take some time to move higher. But Swiggy, I think it is very close to its crucial levels of around 400, 420. And from here again, there is a possibility that the stock can move higher because everyone was waiting for the results. And after the result, and already the way there was fall in the stock, I am of the view that the overall result is now is discounted in the price, and today's correction will be an opportunity for medium to long-term investors to invest in. So around these levels, the stock is attractive to buy for with a short-term to medium-term view. And Zomato, I think it is better if there is any rally, then we should look for reducing some positions.
Let's get your index calls this morning, Shrikant. Are you feeling bullish on the bank nifty ahead of the policy?
Yeah, I think the overall performance of the market is really good. It is showing a lot of like broad-based sort of activity, and whenever there is such type of activity, I'm to say whenever the market is like remain in uptrend and it crosses previous swing high without any major efforts, it clearly indicates that we are heading higher to the next major levels like 24,000 or maybe 24,200, where the market has spent maximum time in the past. So broadly, I am expecting market to move towards those levels. But in case if there is any correction because of any reason, we should look for adding long positions close to 23,650 or 550 levels. Broadly, we can keep stop loss at 23,500. So buy on dips should be the strategy for indices. Bank Nifty also, there also I'm expecting some gains in banks because our bond yield, India's bond yield is also now close to 6.65, 6.66 levels, which indicates that a higher possibility of rate cut in the RBI meeting, and it will help large banks like Axis Bank as well as HDFC Bank. So these stocks should do well. And after the, I think, Cognizant's result, IT stocks should also come into the momentum.
Okay, let's talk about your picks then this morning. What are you focused on, Shrikant?
Yes, from the IT space, we like LTIM, LTI Mindtree, which is currently around some 6,050, 6,020 sort of levels. There, I'm expecting stock to move towards the levels of 6,200. We can keep stop loss at 5,950 for the same. It is forming some bullish consolidation formation, so it's a buy at current levels. And we also like from the pharma space, Alivus, that is Glenmark Life Sciences, which is currently around some 1200, 1220 sort of levels. And there we have a target of 1330. We can keep stop loss at 1180. So pharma as well as IT, this stock should be on the watch list.
All right. Thanks, Shrikant, for that view. Pull up AFCONs. This is something that you should watch. It was up and about in trade yesterday. 8.6% higher, 465 was a close at the end of trade yesterday. And Jefferies has initiated a buy rating with a target of 580. So a considerable upside from this point as well. Harsh is joining in to tell you what they're saying and why they have initiated with a buy. Harsh?
Well, 25% upside is what Jefferies is penciling in on this one, initiating coverage and therefore stock well in focus. They're calling this a play on the infra space, yes, but also the only credible alternative to a possible Larsen and Toubro. They are saying that it largely operates in the same segments, and I'll call out those segments for you. Road, rail, water, irrigation and marine. Hydrocarbon is also an area of expertise. Defense is not, and therefore also adds a little bit of ESG to the whole mix, which L&T does not offer as much. Now, in terms of diversification, it's well diversified and has a good track record with regard to execution, good cash flows and solid balance sheet. All of those add up very well. They are expecting a 72% CAGR on the profit after tax for this company over the FY24 to 27 period. So very strong. They're also expecting margins to go from around 10.3% currently or FY24 to 11.1%. So margins will also get better as efficiency improves. All of this to lead to this 25% upside. Very, very constructive, Jefferies.
Also, the other stock to watch this morning, and though numbers will come middle of the day, is State Bank of India, Harsh. What is the street expecting from SBI earnings, since we're focusing so much on the banking pack today? Important to get that perspective.
Well, it will be interesting to see where margins lie on this one, because you'll likely see some bit of margin tapering, but SBI has insulated itself to a large extent with regard to margin decline. But over the last quarter or two, we've seen that erode slightly. Whether the margins continue to erode will be something that everyone will watch out for, and commentary around what to expect as well with regard to that number going forward. The other piece will be on asset quality. Of course, agri, it's seasonally a quarter where agri pressure does come, and therefore you might see a bit of an uptick with regard to provisioning and slippages. But nonetheless, you will expect solid asset quality to come through for SBI even now. Corporate growth and how that's kicking through will also be a key. How the pipeline is evolving with regard to corporate will be a key. But you're expecting some bit of taper on a sequential basis on the profit after tax. You're expecting NII of around 42,500 crore, operating profit around 27,500 crore, slight bit of taper even on the operating profit side of things. Provisions will see a bit of an uptick, as I did mention, and profit after tax is expected around 16,500 crore. If I adjust for the one-offs in Q3 FY24, that number will see a rise of 15% YOY. Otherwise, there was a 7,000 crore one-off at that point, and therefore the number anomaly will be large, and hence I've taken this kind of normalized growth for perspective. OPEX visibility, operational efficiency kicking through will be other factors which we'll have to look out for, and growth commentary as well, of course.
Just very quickly, because you mentioned margin as the top point to watch, what is the range that would be comfortable or a decent number, and what would be a disappointment?
maybe anything between 3 to 5 basis point decline over the last quarter would well be a solid number to watch. A 3.14% was the margin number last quarter. Anything between 3 to 5 basis points is something I believe the street would still very well digest. Anything more than 5 basis points would likely be a disappointment as per whatever reports I've been reading.
Okay, so that's the State Bank of India story. I mean, let me get Nilesh Jain on this on charts. Are you liking State Bank of India, any of the other public sector banks that you would look at this morning?
See, within PSU banking space, yesterday we have seen some bit of underperformance within SBI. So State Bank of India, for the timing, I would rather wait for a breakout above 780. So it's an avoid at current level, buy only if it breaks above 780 for the target of 800 plus. But at present, within PSU banking space, Canara Bank is something that is looking attractive. And we may see a follow-up towards 98 to 100. So that is looking attractive. It can be bought at current level, can also be added on declines with a stop loss below 93.5. Apart from that, Bank of Baroda is another stock within PSU banking space that is also showing strength. And we may see a strong rebound towards 225 to 230. With a stop loss below 212, Bank of Baroda can also be bought.
Some mid-caps have come out with good numbers as well today. And just while we wait for a breaking news, Nirav, very quickly, have you looked at the numbers of a VRL Logistics or an Avalon or a GE Vernova TND?
We've seen the numbers of GE Vernova, and I think because we like the entire transformer space, I think a very strong set of numbers, but of course valuations running far ahead. I think on a 22 rupees earnings, we have the stock going at 1700 levels. So I think on a PE multiple, it's very difficult to justify this kind of valuation. But I think the order book is quite strong in this particular space. But I think we would be inclined to still go with the Hitachi Energy. That gives us much more comfort as far as this space is concerned.
Interesting, particularly because if you look at the price performance over the last 3 months in the context of the broader markets, this is a company or a stock that has gained 1%. And certainly the valuations are not cheap. On to an NDTV Profit exclusive now. This is what we were telling you about. There's a regulatory change in the offing in the way that companies will have to report on environmental, social and governance norms and meeting them. We've got Charu, who's broken this exclusive story, joining in to tell you about the key details here. Charu, what would this entail?
Hi, so currently SEBI has a committee that deals with ESG disclosures, and it has been mulling on changing them in a way that they are more aligned with the global standards. Currently for our ESG disclosures, we refer to business sustainability and responsibility measures. However, we are hearing from our sources that the committee has been mulling to make it more aligned with the international disclosures. What we are also hearing that there will be the incorporation of the S1 and S2 provisions that are there in IFSR, which are international provisions. So these deals with sustainability and climate related disclosures. So the committee is discussing and trying to see if these can be incorporated in India's ESG norms. So this is currently in a discussion phase only, and before something comes out, there will be a proper consensus and debate and discussions in which all the stakeholders will be included, including the smaller players. And we have also heard that Shakti Foundation was onboarded by the committee to help it in its research related purposes. Apart from this, for the verification committee which will be verifying the disclosure norms, there has been some discussion about tweaking its accreditation related measures. For example, it will now have to be accredited by a government body. Now there is some information regarding that as well. However, once again I would like to mention to the viewers that this is still in a discussion phase. This is what the SEBI committee has been mulling, and there will be a consensus taken from all the industry stakeholders, including the smaller players, and it will be seen if it is going to be benefiting by getting aligned with the global measures, and then only a step will be taken.
Okay. All right. I mean, it would be interesting to see if there is any cost impact to align with global ESG norms. So that's something that we should definitely pursue. But thank you, Charu, for those details. That's the NDTV Profit exclusive this morning that you're seeing. We're taking a very short break. We're back with the pre-open. Take a look at implied open, still opening in the green. but no fireworks expected this morning, which is not necessarily a bad thing. We'll be back in just a minute.